Let's talk money.
Hello and welcome to this week's edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Women and money. It's an important issue. Sometimes it can be a tricky issue. But today we are here to explain why this issue goes well beyond just the money you have in the bank. It's about liberation. It's about the freedom to pursue your dreams and the confidence of having financial security, which enables you to face all sorts of potential life situations. Yes, ladies, we need to talk money. And joining us to do that today are Suranjana Borthakur for Mirae Asset Mutual Fund, as well as Mrin Agarwal of Finsafe India. Ladies, thank you so much for joining in. Great to be sort of speaking to both of you. We have Suranjana right here with me in the studios, and Mrin is joining us all the way from Bengaluru. So welcome to the show. And three women talking about why more women need to talk about money. This is an interesting one. Opening thoughts, Suranjana. You've been in the financial services business for a long, long time. You're talking to a lot of clients, I'm sure. So where have we reached in the journey of more financial awareness and more control that women are willing to take on their wealth and finances?
Hi, thanks, Surabhi, for having me on this show. I think the journey has started, and I would say a lot of trends are changing in the mutual fund industry now. You know, if you see in terms of participation of women earlier, it used to be much, much more limited, and people would also have apprehension in terms of, starting off with the journey. I would want to say one thing that, whether people are working or not working or, dependent on someone, it should not be, financial dependence should not be confused with financial, literacy or being ignorant is not what is okay. You have to be able to upgrade yourself. A lot of times the journey of women in India have been where there's some untoward event that happens or they lose some loved one in the family. That is when they suddenly get aware and suddenly start, really learning more about finance. Maybe that should not be the journey. The journey should start early. You should start getting involved in financial conversations at home. Whenever, whatever assets, liabilities, debt, whatever is there in the household should be a thing which needs to be discussed by both parties, the men and the women. And once they do that, it is also important to have certain assets in the woman's name. I have had situations where I have heard from friends who, went through a divorce situation and they knew that all the investment is in the man's name. And, it was a discord which could not be resolved, and which is where this lady had to start from zero, which is something which can be very hurtful. So it is important to have assets in your name. It is important to know about the documentations. A very basic part of the journey is knowing about the bank accounts, knowing about your insurance, knowing about how do you go about, taking care of things if somebody is not there to help you. It's also important to actually understand that, when you build for the future. You do not just build for today. You have to know that if you're saving up for your retirement, for your child's education, for your own, whatever you want to do in terms of your journey. It's a long-term thing. And also to keep probably reviewing things, while you are doing that. It's also when you identify your mistakes and then you correct them and then relook at it. It's a very different way.
I think you gave us a very powerful headline to begin with. And this applies to a lot of women who are not earning. Maybe they're sort of, dependent on, the members of the family, their husbands, spouses, father, brother, someone else, perhaps a sister. Financial dependence does not equal financial illiteracy. Just because you're financially dependent doesn't mean that you can be okay by being financially illiterate. That's a very powerful statement. And thank you for putting that on the table. Mrin, I know you folks were also doing, I think, a survey amongst a lot of people that you work with, women that you work with. Can you tell us if anything interesting came out, and what are you seeing around you when it comes to women taking more ownership of their finances?
So good evening, Surabhi, and it's lovely to be on the show today. I do see more and more women. So in my last, I would say 29 years of journey, 20 years of being an advisor and then being an educator, I would say that a lot has changed in the last 5 years where women are taking more interest in managing money, I would say prioritizing it more because they understand that at the end of the day, you need money for everything, right? So that's a good thing. But again, of course, I would still say that a lot of the typical investor mistakes that we see are still happening. But the good thing is that women are slowly prioritizing money management. And one of the surveys that we do on an annual basis is among working women professionals. And one of the findings of that survey was that 68% of the women actually said that they're not sure if they have enough for financial needs. And then a lot of women were also very worried whether they have enough for emergencies. So I would say that while these worries exist, the good thing is that people are thinking about it and want to do something about it.
Absolutely. We've got that chart up on the screen right now. So, I mean, the issues that dominate women's mind when it comes to their own finances is a good thing. At least they're thinking about it, right? So, saving for life goals, saving for emergencies, these are some of the top priorities that women have spelled out. And we are here to try and sort of answer some of those questions and help you get to those targets. So, let's break this down to make matters a little simple. Between women who are earning, so they're dealing with their own money, and those who are not, so therefore they're part of maybe the family wealth, or like I said earlier, could be dependent on others for their financial goings on. So starting first, Mrin, with the former category. Now we're talking about women who are earning. What are the bare basic house rules that you would like to put on the table when it comes to just taking ownership and not overlooking things that can be very, very important later on in life?
So the first thing that I would say for women who are earning, please do not equate financial independence with economic independence, because a lot of times I see that women feel that we're earning money, so we are financially independent. No, if you're earning money, it's great, you're supporting yourself, but financial independence is really about having enough to meet all your financial goals and all of your expenses, right? Now, in order to get there are a few basics that you need to keep in mind. And, I would say that today we really need to work backwards and work on these basics, because what I'm actually seeing is that there's so much focus on what fund to buy, what stock to buy, that we've forgotten the basics. So the basics is really about having a budget. And I know it's not the most interesting thing to do in life, to budget, but it is important to do so. And it's very important for you to track your expenses, because, one of the focus areas needs to be about putting the right amount into investing. So everybody is investing, but are you actually investing the right amount? And I would say that right amount is 30 to 40% of your take home income, right? The second
The reason I'm laughing is that a lot of viewers, including, the younger viewers, even middle-aged viewers, will say, what is Mrin saying? 40%? But we're going to come to that math. I know you have an example, and we'll come to that, because that investing point is really important. But actually, Mrin, allow me to club a viewer query with this question, because we're talking about independent earning women. So there's actually a question that's come in. So let me throw that back at Mrin to answer. This is a query from one of our viewers, Asha. She's 33 years old. She's written to us on Instagram, and she says that I'm a working woman right now. I don't know about my next life choices. I'm not sure if I remain single or what happens. But please tell me the basic steps which will help me build a secure financial plan. So, Mrin, there you go. Now, here is Asha. She's asking you exactly that question that you were talking about, that earning is not equal to financial independence. But Asha actually wants to get there. How to get a robust financial plan going. So please continue.
Okay, so first is, of course, do the budgeting and ensure that your loans are limited to 30% of your take home, and you try to save at least 30% of the take home. The second thing is that you need to ensure that you have financial security, and financial security in form of having an emergency cash, which has 6 months of expenses, and having enough insurance. So again, Surabhi, it's very commonly seen that everybody has life insurance and health insurance, but is it the right amount, right? So two things, what I would say is that please focus on health insurance in a very big way. Our own survey found that a large majority of women had not thought about what's going to happen to their health insurance in case if they decide to stop working, right? And in today's environment, given the medical inflation and giving the medical expenses, I would say that you need to have at least 10 to 20 lakhs of medical insurance, which means that have the employer insurance, but you need to think much beyond the employer provided insurance and have that external cover. Since you're only 33 right now, the cover may not be so expensive. You can look at some of the super topper plans that are available, because they turn out to be much cheaper. So this is on financial security. And then, of course, you do need to work on a financial plan based on what your goals are and decide your investments based on that. So, I mean, I would highly recommend that you work with a financial planner for that.
Oh, absolutely. Let me come to you, Suranjana, on this as well. Both the categories. Like you mentioned, that even the non-earners, they need to take more ownership. But even for the earners, what are the basic house rules that you would want to put on the table as a finance professional?
See, I would like to put across a thought that I think, firstly, women need to have a mindset change. I think what happens with women is they think this is not their job. This is something that they're not good at. And I think this is a lot to do with the social fabric that we come from. I think we, as a country, we have evolved from, joint families where having a conversation about money was not the most pleasant thing. Women used to feel that if they have a conversation, firstly, they're ill-equipped and they don't have enough information, and men do the job better. Or they also feel that there could be a certain level of mistrust that could build in if you talk too much about money. So dinner table conversations were never about money, so which is where we come from.
Yeah.
But now things are changing. People are actually seeing that. I notice one thing which happens, a number of women investors may go up, but a lot of times the decision making is not done by the woman. It's actually, like you mentioned, the father or brother or spouse, somebody who's taking the decision on their behalf. But women are actually taking so many important decisions in life. They are actually, there's a survey which says that 80% of decisions about children's education is taken by women. 70% of all household decisions are taken by women. In fact, women are doctors, lawyers, corporate honchos. They take so many important decisions, but when it comes to finance, they sort of take a back step. So I think firstly, the thought needs to change. That once you can actually start thinking how you take control, you can actually look at the space very differently.
Sure.
But when you start with the journey, I think it's very important that you start with a learning. Like what Mrin also mentioned, the fact that you have to be aware of what the budget is, how you want to manage very basic things like budget, saving and investment, the difference between the two. A lot of people are not really thinking through it.
Sure.
It's also important to start small. A lot of times people feel that I don't have enough money to invest, so I'll invest when I do have the money. But it's not about the quantum. It's about starting small and starting early. It's also about professional guidance. A lot of times, in fact, survey says that women are more akin to taking advice from professionals. They actually believe friends, family also, but advisors are a great way of, going for women. So that is something, again, they can think of. I think for women, community learning or, actually women coming together and discussing their issues and actually helping each other learn is something also which is very strong. In fact, they say that men always look at digital medium or other mediums of learning, whereas women actually go by somebody else's advice. So which is where community learning or camaraderie is
and
something
we love to talk.
We love to talk.
Why don't we talk money? Absolutely.
Exactly. And also, I think it's important that women think long term, because I feel women are more committed when they think of a goal and they think of being disciplined, they actually commit to it. So which is why long term, any plan that they make, when they look at a goal, it becomes much better for them, and then review it.
Absolutely, great points.
Frequently.
Absolutely. So we've set the basic house rules in order. Now we come to the specifics. We'll take a break, and after the break, we prep you up. Whether it's creating a safety corpus, whether it's starting on that investment journey, or the bigger goal, planning for retirement, we've got some solutions for you after the break.
Let's talk money